Hello and welcome to this very first lecture of General Awareness. We'll be talking about banking in India and Reserve Bank of India. Before understanding about how the entire system of RBI works, what are the main functions and everything, let's look at what is the structure of banking system in India, right? So, how do we understand the banking structure? We understand the banking structure from the first concept, that is Reserve Bank of India. It is called the apex bank. When I call it the apex bank, it means it has control over the entirety of the banking system in the entire country. All the other banks are liable to this central bank, right? The central bank is basically considered to be an extension of the government, and this central bank is important for the sake of keeping an eye. It is called the watchdog bank, which is otherwise, in absence of which all the other banking systems like the profit-making banks would rather be enjoying a heavier profit rather than doing benefits for the development of the country. Another very important thing to be known is that the banking system is considered to be like the spine of the entire country, and if a country has a very well developed, very well organized banking system, it shows about the efficacy, and it shows about the importance of that is given to the central bank, right? Now let's look at the parts that are under the Reserve Bank of India. Next, firstly, we have the commercial banks. These are the banks which are running for the main important purpose for these banks is profit making, right? So any bank that gives out loans, any bank that accepts deposits from the common people, it's a commercial bank. It can be nationalized or private. When I talk about a nationalized commercial bank, we can take the examples of State Bank of India, SBI, etc. And when we talk about commercial banks in private sector, it's basically all the banks which have private ownership and no ownership of the government, or a very small ownership of government, but major stake is owned by the private sector. And we can take an example of HDFC, ICICI, a lot of other banks. Nextly, we have cooperative banks. I think majority of the students already know about cooperative societies. And when these cooperative societies form, they generally have sort of an extension in the banking, sort of their own extension in the banking system. And that kind of system is called as a cooperative bank. It provides short-term and long-term credit to the members of the cooperative society by itself. Nextly, we have development banks. These banks focus mainly on the development of the people that they would like to cater to. They are generally extensions of the government's hands. We can take examples of industrial banks, we can take examples of EXIM, we can take examples of agricultural bank. All of these banks have individual issues in their mind, and they cater to that particular need of the market. Now let's move to the concept. What are the major roles of RBI? What does the Reserve Bank of India particularly do? Firstly, it is the issue of banknotes, all the currency that we utilize in the market that common people have for purchase of commodities, etc. All of this is done by the Reserve Bank of India. The RBI is called as the holder of the banknotes. It is also called the issuer of the banknotes. It means that it makes sure that all the notes are uniform. It makes sure that there is an effective state supervision, because if you know all the cash that is flowing in the entire system of the country, it is already known by the government how much cash is floating around in the country, and it makes the checking of black money, etc. very easy. Nextly, it is also very easy to control and regulate the credit in accordance with the requirements of the economy. It's a further concept that we'll be discussing about in the monetary policy of the country, where how much credit should be given to the banks, etc., so that the economy can keep functioning well, and it can also keep on working. The development path can constantly be in reach. Nextly, it keeps the faith of the public in the paper currency. So a very good example of this, when we talk about the recent uprise of cryptocurrency. Cryptocurrency like Bitcoin, Dogecoin, there are so many other names. So all of these cryptocurrencies, they do not have any authorization or a backing from a central government, and because of that, they are not majorly acceptable by any formal institutions for transaction sake, and that is why people have very less faith in them. Instead of being used like a currency, which was the purpose of the Bitcoin in the beginning, Instead of that, it is being used as an investment, something like gold of sorts. So yeah, that is the first feature, the major role. It issues the banknotes to the country. Nextly, it is called the banker to the government. Let's take an example of a common man like you, like me, all of us. We have certain dealings with the bank that we do constantly. First of all, we make deposits into the bank. When we have excess money, the bank will probably give us interest rate on keeping the deposits over there. Nextly, we sometimes take loans from the government. We take the loans from the banking system, like any bank that we have an account in, we probably can go and ask for a loan at any time, given our credit record, etc. So all the things that a common man does with the banks, the Reserve Bank, because it's the apex bank, it is the central bank of the country. Everything that a common man does with a normal bank is done by the government with RBI. So in one sense, we can call it in a way that RBI is the government's bank, because government cannot deal in such short, currencies, etc., or it cannot deal in smaller amounts because all the transactions are very huge in between countries, etc. So it acts like a bank to the government. In continuation, we can look at the Reserve Bank of India, and we can call it the custodian of cash reserves of commercial banks. What generally happens is that every time any bank has extra currency available with them, we are talking about commercial banks like SBI, ICICI, RBI, etc. Sorry, not RBI. Commercial banks such as SBI, commercial banks such as HDFC, ICICI, all of these banks. So when we talk about these banks, whenever they have any excess amount of money available on their hand, what they do is that they give out this money to the central bank, the RBI, and they act like the way that you and I would act for a normal commercial bank. When we have excess money, we keep it safe, and in order to keep it safe, when we keep it in a bank, the bank gives us interest. Similarly, the Reserve Bank of India will give out interest to all the banks that deposit that extra money that is available with them, which is why it is also called as the banker's bank. It is like a bank to the bank. Nextly, it is the custodians of country's foreign exchange reserves or a foreign currency reserve. So it is a widely known fact that every country needs foreign exchange to survive in the international market. Nowadays, we have this thing called globalization, where every country is dealing constantly with other countries. Like a very good example of this could be the import of raw materials for making vaccines, etc. So in order to be paying back these companies and all the transactions that we are having with other countries, we need foreign exchange. We need the country that country's currency, or we need the currency which has more acceptability in the market, like the currencies such as dollar, euro, and pound. It has universal acceptability. All the other countries also accept them because they have a very standard rate, and they rarely fluctuate in their own right. So which is why these currencies are held by the Reserve Bank of India, and they can be used by the government under the authorization of the Reserve Bank of India. Nextly, it is called the lender of last resort. What I mean by that is that commercial banks approach the Reserve Bank in times of emergency to tide over the financial difficulties. Now, what happens is sometimes if I am, let us say, a commercial bank, and I'm a smaller commercial bank per se, I might not have sufficient amount of money available with me when a certain person comes to withdraw their deposit. In which case, the Reserve Bank of India will come to my rescue, and it might charge a higher rate of interest when I have to pay that money back. But in any which case, all the banks can rely on the Reserve Bank of India. All the people can rely on the efficacy of the Reserve Bank of India, because it is a body that is it is working under the government. It cannot cheat you. Nextly, central clearances and account settlements. Since commercial banks have their surplus cash reserves, all of them are put in the Reserve Bank, it is easier to deal with each other and settle the claim on of each other each other through the books by keeping entries in the books of the Reserve Bank. So majority of the people already know this, but for those who don't, all the banks have transactions amongst each other. Because the banks are making transactions with each other in order to, whenever, let's say, there is a bank A, there is a bank B, bank A does not have sufficient amount of resources or sufficient amount of cash available. Bank B has excess amount of cash available with them. They will loan that money to bank A. So this is a very simple transaction that can happen between banks. Now, instead of the transactions being settled directly in terms of cash, etc., all the clearances, let us say there are 10 banks trading with each other. Bank A has taken loan from bank B. Bank B has taken loan from bank C. In that case, since bank A already owes to the bank B, instead of settling the account by paying to the bank B, it can directly go and settle the account with the bank C, whom bank B owes. So it's a very simple transaction which can be done directly by RBI, because they are the maintainers of the they are the maintainers of the government's books, or as we call it, account books. Nextly, they are the controller of credit. This concept comes under the monetary policy of the country, which means that every bank has a certain amount of money that they can give out in terms of loans or in terms of credit to common people. Now, how do we regulate how much money can a bank give out? Let us say a bank has a total of 10 crore rupees available with it. Can the bank give out the entire 10 crore rupees to somebody in loan? Which is something that does sound okay in one go. But if we think about it, what if somebody else who has made a deposit comes to withdraw that deposit? In which case the bank will not have sufficient amount of money available to give it back to that person. So in that case, what happens is there is a certain reserve ratio that is taken by the RBI, which makes sure that the banks keep a separate amount of money with themselves or with the Reserve Bank of India as sort of like a reserve for a rainy day or something like that. So in that case, the Reserve Bank of India makes the decision for the monetary policy. It tells all the banks about how much money they can give out in terms of loans. So it is called the controller of credit, which is a very important concept and can be discussed further in the next classes. Thank you.